And this is Bloomberg Technology. Coming up in the next hour, Apple's fall from the highest branch. The smartphone maker loses its stronghold over the title of world's most valuable company after Microsoft overtakes it in Monday trade. Plus, sandbagging Sam Berg, the Facebook COO, now in the spotlight after multiple crises at the social media giant. Mark Zuckerberg says he has her back. We'll discuss if that's enough. And counting the Cyber Monday cash, the annual shopping extravaganza is expected to be the biggest yet. We will crunch the numbers. Well, Apple's title of world's most valuable publicly traded company is no more. During Monday trading, Microsoft's market cap overtook Apple's for the first time in 8 years. Just last month, the iPhone maker's value topped $1.1 trillion. But since then, its share price has been shaved in the broader tech sell-off amidst concerns about weak demand for the flagship iPhone. Let's bring in Bloomberg Tech's Mark Gurman from LA. So not Amazon now, Mark, but Microsoft surpassing Apple's market cap. What do you make of it?
Yeah, it's pretty unbelievable. Maybe a year or two ago, if someone said, do you think Microsoft is going to pass Apple in market cap in 2 years, nobody would really believe that, especially in the current technology climate where a lot of people think that Apple has endless runway of growth. But if you look at what's happened over the past 2 months here, there have been so many concerns and so many issues with Apple in terms of iPhone sales, concerns about the prices of the high-end iPhones, the XR, the XS, and the XS Max. Concerns about long-term initiatives, if the company missed on previous big things like TV and voice, where it's not all too surprising. The question is, will it turn around and when?
So I have a chart here in my GTV library showing the rise of Apple as well as the fall in Apple and the rise in Microsoft. Aside from what Apple might be doing badly, what is Microsoft doing well?
Well, Satya Nadella has really turned the company around since taking over from Steve Ballmer a few years ago. The company has transitioned from a software company to a software and services company where they're trying to get their applications on as many devices as possible. You can buy an iPad now and fully load it with Microsoft apps. You can buy an Android phone now and fully load it with Microsoft apps. Whereas if you bought an Android device or a Microsoft Surface even, you cannot fill it out with Apple services and Apple apps. And that is the big difference between the two companies. Microsoft works on every platform. Google, for its part, works on every platform, whereas Apple is very much glued to its own hardware. And Microsoft is clearly winning for itself on that approach, whereas Apple, for the last few years has been winning on its approach too. So I think there's room for both. But that's why Microsoft has been so successful lately, in addition to their infrastructure around services and servers.
Alphabet and Amazon, not far behind them. I mean, do we really see these four companies trading at a group closer to the top? And will it not be clear who has the title? And, going forward, will we see these shifts over and over again?
I think we're going to see this happening for, the next several months or even a couple years, where it is those big four companies all vying for the top spot. I mean, some days when we're talking about this, it could be Amazon. Other days it could be Apple. And other days like today, it could be Microsoft.
Okay, Mark, hang on a sec, because I do want to get to another story. Apple also facing an antitrust case in the Supreme Court, which could have wide-ranging implications for the entire tech industry. The class action suit accuses Apple of maintaining a monopoly over app distribution on iPhones and, as a result, jacking up prices. U.S. Supreme Court justices Monday appeared inclined to allow the lawsuit to continue. I want to bring in Bloomberg Supreme Court reporter Greg Storr in D.C. Along with Mark Gurman. And certainly this wasn't good news for the stock either, Greg. But what did the Supreme Court justices signal about their position on this Apple case?
Well, the general sense was that they were going to let the lawsuit against Apple go forward. I counted only one real vote on Apple's side. That was Chief Justice John Roberts, and as many as 7 justices who, while taking different perspectives on the legal issues in the case, might be inclined to vote to let the lawsuit go forward. If so, that's bad news for Apple, obviously. It adds a source of pressure on them to reduce the 30% commissions that they charge to App Store developers.
So, Mark, walk us through the arguments here. Apple takes a huge cut from the App Store. We know that 30%. It's been in contention before. But what makes this particular lawsuit significant?
So right now, Apple is really pivoting towards wanting investors to focus on its services revenue, right? And basically, the services revenue, the majority of it comes from that 30% cut. So if Apple takes any hit on that 30% because of this lawsuit, their services revenue is going to take a very significant impact. And that's why this lawsuit has put so much at stake for Apple.
So, Greg, you were saying, talk to us a little bit more about what's behind this particular case.
Yeah, so this is a consumer lawsuit suing, saying we're paying too much for apps at the App Store. And a focus of the lawsuit are the commissions that Mark was talking about there. And what Apple argues, and what the issue is at the Supreme Court, is whether the consumers can sue over commissions that were actually charged to the developers and not directly to the consumers. There's a Supreme Court precedent from 1977 that says only the direct purchasers of something can sue, claiming that they were overcharged.
So, Mark, how could this impact the broader industry? Obviously, there are other stakeholders here. There's the Android operating system, which is so much bigger than Apple's. But how could a ruling here ripple beyond this particular case?
Well, there's two reasons as why. One, the most obvious reason is because of the precedent that it would set. Is this going to create issues for other app store makers like Google with Google Play? Are they going to have to change the way they charge commissions to developers? Is this going to spark lawsuits from consumers on the Google Android side as well? What's it going to mean for Amazon? What's it going to mean for Microsoft, other companies that operate these stores? What's it going to mean for basically any technology company that operates some sort of online marketplace where royalties are going to the company for hosting? I mean, if you think of any music service, it functions very similarly. What does it mean for Apple's other properties like the iBook store, which had its own, e-price fixing situations, different, but still a lawsuit in the iTunes store? The other thing here, does this mean that Apple is going to start allowing other app stores on its platform, such as allowing third-party developers to create an app store competitor? Is that one solution to this? Is that one way of settling this lawsuit? So I think there's a few interesting ways this could have broader impact than just Apple's app store.
Now, Greg, could this actually trigger a massive change in how we buy apps?
It could. I mean, the core of the lawsuit is focused on Apple's control over the App Store. Apple essentially makes it such that consumers can't buy apps anywhere else. And the suing consumers say that's really the source of the problem here. Apple has a monopoly, and it's abusing its monopoly to raise the prices of the apps. So if at the ultimate end of the day, what we could be seeing is a world in which you can buy apps from more than one place, not just the Apple App Store.
Are there any precedents, Greg, that we should be looking at in terms of how the court has ruled on other cases involving big tech companies?
Well, it's kind of hard to generalize in terms of tech companies. The court, this is a generally pro-business court. Usually businesses do win here. Oftentimes these antitrust cases, as happened in an American Express case last term, divide the court along ideological lines. Ultimately it is possible that the court could divide, say 5-4, with the 5 conservatives siding with Apple, but that wasn't the sense of what I was getting in the courtroom. It seemed like you may have a bigger consensus willing to let this suit at least go forward.
All right, Greg Stohr, who covers the Supreme Court for us in D.C., thanks so much, as well as Mark Gurman in L.A. Always. Thank you both. Coming up, Facebook COO Sheryl Sandberg's leadership being questioned. But is she being thrown under the bus? We'll discuss next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. Bitcoin dipped well below $4,000 before recovering some of the loss Monday. This means it's now declined some 80% since last December's record high of almost $20,000. Investors have been concerned about increased regulation and problems with exchanges. Well, multiple crises at Facebook this year have put immense pressure on Chief Operating Officer Sheryl Sandberg. Bloomberg spoke to 8 current and former employees from her side of the organization. Some now blame her for Facebook's woes. They say at times Sandberg prioritized her own brand over Facebook's. They also say she didn't address problems quickly enough or treated them only as perception issues. Here to discuss, Brian Weiser, senior analyst at Pivotal Research, also with us, Bloomberg Tech senior executive editor Brad Stone. So Sarah Fryer has an extensive piece out on Sandberg in particular, and we've seen a lot of scrutiny of Mark Zuckerberg, that he simply didn't believe that Facebook could do some of the bad that we've seen in the world. Always talked about how Facebook can do good. But do you think some of these issues around Sandberg's leadership will cause long-term damage?
I think it's unclear right now. I mean, this is not the last chapter in Sheryl Sandberg's leadership at Facebook. Look, she got a lot of credit for building a business, with $50 billion in sales, for helping Mark Zuckerberg take, Facebook to 2 billion users. But she's also the head of the legal and policy teams at Facebook, and on Friday took responsibility for some of the recent revelations, the abuse and some of the relationships with these outside PR firms. And so she's got, to answer for some of Facebook's recent mistakes, for a lot of the bad publicity. But look, that's what leaders do. They take responsibility. That's what she's done. And we're going to see how quickly and carefully Facebook can respond to some of these things. And yeah, if they can't right the ship, then I do think her legacy will be hurt.
Some of the more specific details in this report, that she not only prioritized her own brand over Facebook, but focused on messaging around the challenges rather than getting to the root of the challenges as she was focused on growth. For example, Brian, Sarah reports on Sandberg going to D.C. in 2017 to try to smooth things over around some of these issues, and the trip actually backfired because she didn't have enough concrete points to respond to some of the queries of lawmakers. What's your take?
Well, I guess there's a lot that's unsurprising in the reporting, although I have to say that the nuances were really useful, and anyone who hasn't read Sarah's article absolutely should. The bigger point around Sandberg is that, it does occur to me that I wonder if she's actually, after reading it, I wonder if she's been so constrained in her role because she doesn't have absolute control over Facebook. If she has any control, it's over her own self. So maybe that's what you focus on if you're never going to have complete autonomy over the whole company. I'd throw out 2 things. I think that while there's elevated criticism around Sandberg right now, I think there appropriately was, certainly by some, myself perhaps included, elevated concern about Sandberg last year. I think, when certainly when Facebook's head of policy for EMEA goes and lies or actively misleads the British Parliament back in February, that's a problem. When their advertising products are actively misleading their customers, that's a problem. When they're consistently having metrics issues, again, these are also under Sandberg's responsibility. So I think that there are a lot of things that she's, appropriately going to be criticized for, but it's not clear where the responsibility ends with her versus Zuckerberg. And frankly, the bigger problem is maybe more foundational inside of the whole company, from the ground up.
On that note, here's what Zuckerberg told CNN about his partnership with Sandberg and his intention to continue to work with her for many, many years. Take a listen.
Sheryl is a really important part of this company and is leading a lot of the efforts to address a lot of the biggest efforts that the biggest issues that we have. And she's been an important partner for me for 10 years. And I'm really proud of the work that we've done together. And I hope that we work together for decades more to come.
Brad, what do you make of that? I mean, I think Brian's point is an interesting one that, maybe if you can't control a lot at the company, the one thing you can't control is yourself.
Yeah, no, I think, it was a sign of support that Mark was making for Sheryl. Clearly he doesn't want to throw her under the bus. That relationship will continue. But I think Brian's point is right, that, that Sheryl, might be constrained, and that Mark and Sheryl probably need to work a little bit on their partnership, to make sure that they're not addressing the messaging aspects of these crises, but getting to the underlying problem.
Brian, would you like to see Facebook bring in a third person? I mean, there is reporting that, Mark Zuckerberg had been looking for a third person to handle some of these policy issues, but ultimately decided not to do so.
Well, I mean, I think that the idea is that person would report through Sheryl Sandberg, if I understood it correctly, unless I misunderstood it. But I would throw this out. The big issue is a board-level issue. I mean, let's go back to the days of Yahoo, right, and Marissa Mayer. For all the criticism that Mayer rightfully deserved, after about 2 years, this was no longer Mayer's fault. It was the board's fault. So, to be clear, the problems at Facebook have been pretty obvious. If they were obvious to the President of the United States of America in 2016, who told Zuckerberg, you got problems, they've had over 2 years, at least, of problems that have been pretty systemic. The board has to have been aware for quite a while. And so then the question is, what do the independent directors do? All they can do, I mean, they're the ones who are best positioned to get to the root of the problem, to figure out what is best for the company. The fact is that if the company is, in fact, entirely dependent on Mark Zuckerberg, that's not a company, that's a sole proprietorship. They've got bigger problems.
Many of the board members predate Sandberg and predate her joining the board as well. Brian is alluding to, Brad, another story about UK Parliament seizing internal Facebook documents as part of their investigation into the Cambridge Analytica scandal, which is kind of huge that we're seeing another government take such extreme action. Walk us through what happened here.
Yeah, it's complicated. You have to go back 4 years when a small app company called 643 sued Facebook, saying that it was favoring some app developers over another, saying that it was being inauthentic in how it communicated privacy controls and what information it collected. So that lawsuit was here in California. The company was able to obtain through discovery some internal Facebook communications. Fast forward to last week when the British Parliament, very upset over Mark Zuckerberg's failure to testify in the UK, to the testimony that Brian alluded to earlier being disingenuous, went and got the founder of this app company, 643, and got him to turn over those internal correspondences that they had obtained through the court process. So what did they say? I mean, it could be internal communication between executives, including Zuckerberg, about how Facebook obtains information from who and whether they're being disingenuous in terms of privacy controls and how they manage that information. Could be very damaging to Facebook.
So, Brian, how concerned are you about this concern from other governments?
Well, it's not that I'm concerned. I think more investors should be concerned. I mean, the stock should not be up on this. I mean, I realize there's a market level issue going on, but I think that a better way to characterize it is this can't be good. It can only be bad. If you want to bet on Facebook versus governments of the world, unless you think Facebook is going to take its CapEx budget and invest in nuclear weapons, I'd bet on governments of the world. The power they have will be immense if and when they choose to exercise it. And the British government is.
All right, there you go, Brad, a quote for your next story. Brian Weiser, senior analyst at Pivotal Research, always good to have you here, and Bloomberg Tech's Brad Stone. Thank you both. Still ahead, Airbnb just hired a longtime Amazon exec to fill the CFO seat. Does it mean the home sharing company is one step closer to its highly anticipated IPO? We'll have all the details next. And Bloomberg Tech live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network TikTok on Twitter. This is Bloomberg. Airbnb has hired a longtime Amazon exec to help lead preparations for the startup's anticipated IPO. The home-sharing company says Dave Stevenson will fill the chief financial officer job that's been vacant most of this year. Stevenson has been vice president and CFO of the Amazon unit responsible for all global website sales. Joining us for more, Bloomberg Tech's Olivia Zaleski. So, who is Dave Stevenson?
Well, we don't know a ton about Dave Stevenson other than that he's been at Amazon for 17 years.
He did two stints at Amazon,
yeah, he's been very successful at Amazon, and he is a perfect choice, I think, for Airbnb. Brian Chesky, the CEO and founder of Airbnb, has been hiring several Amazon executives recently. He just brought in Greg Greeley to run its homes business, and it makes a lot of sense because Chesky, I think, is trying to build an empire, an org structure that's similar to Amazon's, and that you have these separate businesses, so they would have travel, trips, experiences, and homes.
So talk to us about how he's different than the last CFO, Lawrence Tosi, who was effectively pushed out and, from my understanding, wanted more power or more control than Brian Chesky was prepared to give.
Yeah, Lawrence Tosi is a big personality. He was a veteran of Wall Street. He was a big name. He brought a lot of luster and attention to Airbnb, and is, people attribute Airbnb's success to Tosi, but some people think that he got a little too powerful and wanted even more power. He would sometimes butt heads with Brian Chesky. He definitely was pushing for an IPO sooner, one that would happen this year. Brian Chesky wants one. He says that the company will be ready to go in June, but could go as late as late 2020.
Did the business suffer at all not having someone in that post for such a long time at this stage?
It's hard to tell. Airbnb, of course, says that it's growing and faster than ever. It said that it had its best quarter in Q3 with over $1 billion in revenue. But a report from Morgan Stanley came out recently saying that growth is slowing for the company in key markets in the US and Europe.
So where then is the growth going to come from?
Well, we're seeing a lot of growth in Asia, in China specifically. A lot of millennials are excited about Airbnb, especially for outbound travel. And we're seeing growth coming in these other pockets of the business. Experiences is a big one. We're also seeing, the luxury market growing for Airbnb. They're doing a lot with luxury homes.
Is the experiences market going well, though? I mean, we've reported on challenges there. They haven't really been able to crack the nut.
Yeah, I mean, of course, Airbnb says it's going great, and you just got to give it a little bit more time. We understand that they did burn a lot of cash to build that business, but there are people who really do look to Airbnb for the whole package. For their, when they go on a trip, they go to Airbnb for the accommodations, and then they also go there to find out what restaurant to visit and where to spend the day, what tourist experiences they should have.
So what are you going to be looking for next in terms of timing for this IPO?
Well, I think with Airbnb, we're very interested in growth, understanding, have they sort of tapped out this millennial market? Are they oversaturated? They also have a huge valuation, $31 billion, of the second highest valued company in Silicon Valley at the moment. Can they live up to that valuation as they march towards IPO? Earlier we were questioning often, did they have the right executive lineup? Did they have the right people in charge? And it seems that they do now.
All right, Olivia Zaleski, who covers Airbnb for us, thanks so much for stopping by. Well, this Black Friday Cyber Monday stretch is expected to be the biggest yet, but otherwise, how is it different from last year? We'll discuss. This is Bloomberg. Bloomberg Technology. I'm Emily Chang in San Francisco. Cyber Monday is upon us, and this year's shopping extravaganza is predicted to be the biggest in U.S. history. The biggest online shopping day is expected to generate $7.8 billion in sales, up more than 18% since last year, and that comes even as shoppers increasingly spread their shopping over the holiday weekend. According to research by Salesforce, retailers launched their best deals well in advance of Black Friday this year, with online purchases on Thanksgiving Day itself totaling $3.7 billion. Black Friday's online sales hit $6.22 billion, continuing through the weekend with a hefty percentage of orders coming in via mobile devices. Here to discuss, we've got Salesforce Vice President of Industry and Strategy Insights, Rob Garf, with us in New York, and in Seattle, President of online retail giant Zulily. So, Jeff, I'll start with you. As far as you've been able to tell, how has this Black Friday / Cyber Monday been different from last year?
Thank you, Emily. Excited to be here. Appreciate the opportunity to talk to you and your viewers on Cyber Monday. We had a record-breaking weekend. In terms of Zulily, I think I first need to give a little bit of context. Zulily believes in a third way to shop. What we do is make sure that we have great product, scour our buyers, look all over the world for product to offer to customers at unbelievable prices, and offer to them in this fun and addictive website experience. So those deals, we literally have a Cyber Monday every day of the year. But for us, this past weekend, we truly hit record numbers, driven mostly from mobile.
Well, that's an interesting point. There are deals on the internet all the time. So what, Rob, actually makes this weekend different from any other weekend online?
Well, there's a lot of demand, and we're seeing that, as Jeff indicated, through mobile. We're seeing through the whole holiday week about 70% on average traffic via mobile, and then it spiked on Thanksgiving, 54% of orders via mobile. So consumers are reaching their retailers and their favorite brands through mobile, and in turn, retailers are enticing them earlier and earlier with deals, with discounts, with promotions.
The deals, Rob, are so voluminous and so steep that I just wonder, are retailers actually making money over this weekend?
Well, that's the intent, and we're seeing it as strong growth, especially. We're seeing strong double-digit growth throughout the holiday weekend, and a lot of that is being, as I mentioned, driven by mobile, and also retailers are finding that social has become a very, very important attraction vehicle to get to the consumers, particularly on that mobile device.
Definitely.
Jeff, with all these deals, is this a money-making weekend for you?
Yes, it definitely is. I want to build on what Rob was saying from a social perspective. The question is, how do we get in front of customers in a scalable way? How do you build one-on-one relationships? And we found social a very powerful vehicle to do this. So from our lens, when we start thinking about how retail is going to evolve over the next several years, we see social being a powerful element, but also video. So from our perspective, for instance, on Thanksgiving, all of the push notifications that we sent to customers, we literally had 300% year-over-year increase in the clicks and in the engagement from a social mobile type of experience.
But Jeff, I have to get some more specifics from you. Walk me through the economics of how all of these deals, over so many days actually make sense for a company like Zulily and for the companies that are selling their products on your site.
I appreciate it. So I think every retailer has to find their right type of business model to serve their customers. What we're proud of at Zulily is to offer unbeatable prices, truly the best prices out there. As soon as a customer adds a second item to the cart, then all of a sudden we are highly confident. All of our internal studies say that it is incredibly profitable for them. However, unlike other retailers that are a bit more transactional, that are more focused on 2-day shipping, we, on the other hand, have set up a infrastructure network to allow us to serve customers a little bit slower, but with a better value and more unique product. And that trade-off, every customer may not be willing to make, but our customers certainly do, and it's why we're able to do this profitably and sustainably.
Rob, what are the hot products and hot retailers standing out this year?
Sure, yeah, so we scour the internet via our social platform, and we are seeing a lot of chatter about consumer electronics, as you would expect this time of year, but connected devices are raising up to the top, and we're also seeing vintage products as well. We're seeing through separate research that consumers are really attracted to brands that have purpose, that are authentic, and vintage or nostalgic products are rarely raising up to a real high in terms of attracting consumers and gaining that loyalty. We're also seeing, again, in the consumer electronics space, gaming consoles are really big this year, particularly with millennials.
Well, on that note, I'm wondering if some of those brands you're talking about, some of these more authentic brands, mission-driven brands, a lot of these brands actually don't have deals on this weekend. It almost is as if that there's like sort of a pushback to, this everything is on sale all the time. And, is that an increasing trend that you're seeing?
Well, that's part of it. Again, particularly with the younger generation, they're looking for purpose-driven retailers. But we are seeing the promotions, but what we're seeing is there are less spikes. I was just having an executive dinner with several retailers a couple of weeks ago talking about the holiday, and what they talked about is it's not just about Black Friday, it's not just about Cyber Monday anymore, but it's really a smoothing of demand through the entire week. We're seeing a steady drumbeat of promotions. In fact, over Black Friday, we saw a 20% increase in emails that were sent and nearly 30% increase of SMS push notifications. So what that's telling us is retailers are recognizing it's not about just hammering consumers on those 2 days, but creating a relationship with them through the entire holiday and beyond.
Now, Jeff, Zulily is a company that went public, got bought. It's been in the midst of a turnaround. How do you turn around an online retailer in the age of Amazon, in the age when some of these more niche mission-driven brands are winning sort of mindshare?
Well, look, I think each of us have our own type of promises to customers. But for us, it really is about this third way to shop. There once was brick and mortar. Then there was transactional e-commerce, which is where Amazon does really, really well. And they have a great business model there. But for us, what we're trying to do is to offer new curated deals, personalized for each customer in a fun and engaging way. And then once they add that second item to the cart, they should be confident that they're getting the best deal. So for Zulily right now, we're seeing tremendous success. Year-to-date growth has been incredibly strong. Today, we have 1 million more active customers shopping in our store than we did a year ago. And so for us, it is literally working backwards from what that customer wants. And it may be different than other customers who are going to Amazon for a more transactional type of purchase.
All right, Jeff Yurchishin, president of Zulily. I know you got a busy day ahead still, as well as Rob Garv, Salesforce vice president. Thank you both so much for joining us. Coming up, our exclusive interview with HPE CEO Antonio Neri, what he has to say about the continued consolidation in enterprise software that we've seen this year. That is next. Plus, Elon Musk reveals just how close Tesla has come to collapse, how the electric car maker is continuing to survive in the midst of this year's controversies. This is Bloomberg. Now to HPE's big bet on the so-called intelligent edge and CEO Antonio Neri's commitment to spend $4 billion over the next 4 years in an effort to make more data more useful to companies. That means developing more tech in security, automation, AI, machine learning. I caught up with Neri, who's in Madrid at HPE's Discover conference, and asked about that $4 billion investment and when he expects to see a return on it. Take a listen.
We believe the edge, or the intelligent edge, is the next frontier, is a massive opportunity for all of us, and that's why I made the announcement at the HPE Discover in Las Vegas that we will invest $4 billion over the next 4 years. We will see the return on that investment over the next 2 years. This is a business that's really growing fast. In fact, we're growing the business double digits. And what we are doing there is take the core Aruba platform and adding the incremental capabilities needed to move from what we call the edge to the intelligent edge. Aruba brought the connectivity, and we expanded connectivity with SD-WAN. We added analytics, we added security, and now here at HPE Discover, we're announcing the IoT-ready aspect of the infrastructure and the platform, which is a software-defined platform, so that we can move from billions of things between people and places to trillions of things. And that's the scale that's needed to power this new intelligent edge.
Now, one example of this at work is the biotech company Jungla, which is using HPE compute power to essentially power genetic testing at scale. What does your speed make possible there that would otherwise not be?
Yeah, we are really proud to partner with Jungla, one of the startups in the precision medicine. But this is part of a broader initiative, which we call it Tech Impact 2030, which is a partnership with the World Economic Forum. In September, we announced a partnership with the Purdue University to improve agriculture, to improve the quality of crops and the quantity of crops. In fact, we have a fantastic use case here with live crops, so we can show how we do that with them. But with Jungla, we are really focused on the precision medicine, and it's all about improving the research on disease and the mutation of that disease. And using our memory-driven compute, actually they saw 250% improvement in performance on the large pool of data that they use to really understand the mutation of that disease.
So what do you mean by a 250% improvement on the understanding of the data?
Well, think about it. If it used to take, days to extract the insight of that data, now they can do it in seconds. So that's remarkable, because obviously they want to make sure they focus on the right aspect of the research so that eventually they can pass the research to people who can provide the cures. And today is all about time to value, and that will improve time to cure over a long period of time. So for us, is bringing that technology to do good, because our purpose is to advance the way we live and work. And so it's perfectly aligned to what we're really focused on.
Now, we've seen a lot more consolidation in enterprise software this year, but it seems like tech hardware players have been staying on the sidelines. Old HPE was quite acquisitive. What is your appetite for M&A at HPE?
Listen, if there is the right asset with the right complementary IP and the right talent, we will evaluate it. And we really like to think about the Aruba-like type of acquisitions, because we want to stay true to the core of what we're designing and then add those capabilities to our platform, because customers really like what we're doing versus trying to consolidate or do a PE-like type of approach. We really focus on accelerating that innovation through IP and talent acquisition.
Do you think we'll see more deals in general in tech hardware in 2019?
Hard to say. I mean, listen, the valuations are really high at this point in time. At least that's my point of view. Obviously, we think there will be more consolidation over time. But I think now the landscape has been set. What customers are looking for are IT solutions in blocks, where basically they can accelerate time to value through the data. And so more and more, that infrastructure has to become more optimized for the specific workloads, where compute, storage, networking, memory, all coming together to deliver a specific outcome. And that's why we have this unique vision called composability. We think cloud is not a destination, it is an experience, and we need to compose that cloud to the specific workloads. And so ultimately, all the assets have to come together in a way that they can deliver those solutions with the speed and agility that customers are looking for.
So what do you think a potentially newly public Dell would mean for the broader tech landscape, HPE aside?
Well, I think opens new opportunities, right? I mean, we live in a time where disruption is accelerating, so speed matters, right? And then control points and intellectual property matters. So I think, depending on what's happening in the market, we may see an acceleration of that. But again, valuation have to make sense. And at this point in time, I believe valuations are a little bit high, and that's why we see a little bit of correction going on in the market. We'll see. At this point in time, our focus is really on execution. And I think this year we have done a really good job, really proud on our execution front.
Now, you have embarked on a pretty ambitious plan to reduce HPE's expenses. You've pulled out of 74 countries. You've cut manufacturing locations from 17 to 7. Will we see more reductions globally?
Yeah, that's what you're referring to is called HP Next. And HP Next was our initiative to re-architect the company within, focus on our customers and partners. This year, we made remarkable progress. If you recall, the biggest change we did at the beginning of the year was our go-to-market, where we removed layers between myself and the countries. So we removed the regional structure and the sub-region structure. Now we have 11 geos that allow me to really get the pulse of what's going on in the market and then empower the people closer to customers to execute our strategy. We also simplified the number of processes. We are embarked on an IT transformation to modernize not just the process, but IT systems. And we have made great progress. And so, but remember, this is a 3-year journey that I laid out in 2017, so we have 2 more years to go. And the core of this is simplify everything we do to improve our culture of the company, and then obviously reduce costs that will make us more and more competitive.
The belief is that companies will continue to buy servers for data centers as well as public cloud services. We see, however, these public cloud services, Amazon, Microsoft, growing incredibly rapidly. So what does that mean for the server market? Does it stagnate? Does it plateau like the PC market?
So we believe the world will be hybrid. We stated that many, many years ago, and today is a reality. The fact of the matter is that customers will have application and data in both on-premises and off-premises. And I believe both markets, both on-premises and off-premises, will continue to grow.
My exclusive conversation there with HPE CEO Antonio Neri. Still ahead, a startling admission from Elon Musk. He says Tesla was teetering on the brink of collapse because of Model 3 delays. We'll discuss. This is Bloomberg. Tesla's cash problem this past year has been no secret, but even in the midst of Model 3 production problems and an SEC investigation, few expected the company to crash and burn completely. In an interview with Axios on HBO Sunday, CEO Elon Musk revealed just how close the company was to collapse. He said Tesla was within single-digit weeks of failure. Take a listen.
Well, I mean, Tesla really faced a severe threat of death due to the Model 3 production ramp. Essentially, the company was bleeding money like crazy, and just if we didn't solve these problems in a very short period of time, we would die.
Joining us now, Bloomberg Businessweek's Max Chafkin. So, Max, Elon Musk, he's talked about how insanely difficult it's been to run this company. But what do you make of him putting it quite that way?
Yeah, it's interesting. I mean, back in April, there was an April Fool's gag where Elon kind of took a picture of himself, looking, as if he were homeless or something, and said that, Tesla is bankrupt. And and what we're learning is that wasn't as much of a joke as I think, everybody thought it was at the time. I mean, as you said, though, this was kind of out in the open. If you were reading his tweets, if you were looking at kind of the frantic nature of the sort of messages that were coming out of Tesla, as well as the reporting from Bloomberg and others, I mean, you knew that things were bad, that they were really, pulling out every stop that they could to get cars out the door and really struggling with it.
So here's the question, though. They avoided collapse for now, but, is that going to be the sort of state of being for Tesla for the foreseeable future, where they're always, a few weeks away from some potential disaster?
I think that assuming they're able to keep the production numbers, where they are now, assuming that the company, that this is real, that they're really able to produce, 5,000 Model 3 sedans a week, the company's in, a dramatically better position than it was, say, this summer. And I think if you look at what's happened with the stock market, the stock is up significantly, or it's sort of back where it was. I think investors are starting to recognize that. As you said, though, it's not clear that production is totally sustainable, and we still don't know exactly what the margins are. And then the other car makers are coming. There was news today that GM is laying people off, trying to refocus around things like electric vehicles. Lots of electric cars coming out of Germany. So the competition is going to increase. And while I think people see that people are starting to think of that this summer as kind of being a bottom for Tesla in terms of, Elon Musk's maybe mental state and motivation and everything, but also for the market. It's the future success is not totally, assured.
So let's talk about the other car makers, because as you mentioned, GM laying off 14,000 salaried staff and factory workers, also closing several factory locations. And part of that is because they are investing more in electric cars, more in their self-driving unit. What does that mean for Tesla?
I mean, it means that, there's competition. These big car makers like GM, they have not, although actually GM has done a lot better than a lot of others in terms of hybrids and electrics and things like that. But they have not been able to kind of tap consumer demand in the way that Tesla has. On the other hand, they are really good at doing large-scale production. So I think the fear would be, if you were a Tesla investor, the fear would be that once these big car companies really start to figure it out, they're going to be able to undercut Tesla on price. They have these, amazing networks of marketing and car dealerships and enormous ad budgets. Tesla doesn't really have any of those things, and they'll just sort of take over the electric car market. The counter argument would be that Tesla has spent years and years kind of establishing itself as the name in electric cars. And maybe consumers now recognize that. And if they're going to buy an electric car, they're going to want to buy an electric car from Elon Musk rather than from GM.
Well, this GM news is interesting because Musk has talked about, in general, just how hard it is to be a car maker, Tesla or not. But it seems like no car maker is comfortable. I mean, are there any car makers that, are resting on their laurels right now because they've invested in new technology and the future looks bright? I mean, if the future is going to be challenging for Tesla, as challenging as it is, is for GM. Is anybody doing well?
Well, and this is the argument that the big believers in Tesla, the people who are still, the people who are excited about the funding secured tweet. I mean, their basic point is that the entire auto industry is facing disruption of car ownership, where self-driving cars are going to come along, people aren't going to buy electric cars, and that Tesla, as a company that's sort of ahead of the game there, has a chance. I don't think it's clear, how much of that thesis is going to really bear out. A lot of times, people have gotten excited about driverless cars, and companies have not yet hit the really important milestone. So I don't think it's clear how quickly that's going to happen, and it may be a case where people will continue buying gas-powered SUVs for a long time, which would not be great for Tesla.
All right, the road ahead, bumpy and uncertain, but still the road ahead. Bloomberg Business Week's Max Chafkin, as always, thanks so much for stopping by. That does it for this edition of Bloomberg Technology. We are live streaming on Twitter. You can check us out at Technology, and of course, follow our global breaking news network, TikTok, on Twitter. That's all for today. This is Bloomberg.